What's happening, Hardscapers? This is episode 202 of the How to Hardscape podcast, where we talk about how you can start and grow your hardscaping business. And on today's episode, we're joined by Ian McCarthy. He is the president of Blue Claw Associates, Inc., a landscape and masonry contractor based in southeastern Massachusetts, and the Blue Claw Group, a boutique consulting firm for contractors, which puts on a Knowing Your Numbers workshop, which is exactly what we get into in today's episode. Not only Ian's backstory, some context into his story, but also knowing your numbers, budgeting, estimating, and so much more. And since we're on the topic of knowing your numbers today, if you need a software that'll help you streamline processes in your business, from budgeting, estimating, and so much more, check out the How to Hardscape headquarters. You can learn more about that at members.howtohardscape.com or reach out to me at howtohardscape on Instagram. But before we get into today's episode, I want to say thank you to our sponsors, GPS Track It. If you're looking for GPS tracking in your hardscaping, landscaping business, check out GPS Track It at gpstrackit.com/how-to-hardscape. And if you need bookkeeping, accounting, and CFO services, reach out to Cycle CPA, cyclecpa.com. Let them know How to Hardscape sent you for $200 off their services there. We'll be talking more about these two later in today's episode. And without further ado, let's get into today's episode with Ian McCarthy. Today, we're joined by Ian McCarthy. He is the president of Blue Claw Associates, Inc., and a landscape and masonry contractor based in southeastern Massachusetts. And now the Blue Claw Group, a boutique consulting firm to assist other contractors in their similar journey, not to mention several other ventures, including the co-founder of the National Basketball League of Canada, and having been Paver Pete's college roommate, which I saw somewhere in there. So, Ian, thank you so much for taking the time to join us here.
Hey, great to hear, and thank you for having me. I appreciate it.
Before I get to know a little bit more about you, your background into this industry, what brings you to where you are today, what was it like being Paver Pete's college roommate?
There was a lot of beer drinking involved.
I think we can just leave it at that if you're good there. All right. Ian, let's get to know a little bit more about you yourself, how you got started in this industry. Take this wherever you want, a starting point to where we are today, but give us a little bit of context about yourself.
Sure, it's a very non-traditional route of how getting into landscaping, but I started out being an accountant out of college. And so I was living on Nantucket Island, and our accounting firm was based around small businesses because we're not in any kind of major city or whatnot. But one of my clients was a landscaper. He ended up having an agreement to sell the business. It fell through at the last minute. So he was offering it at a deal. And so I ended up buying it. And that's how I got into the business. I knew nothing about landscaping when I bought it.
Amazing. So when you purchased that business, were you purchasing not only like the assets but the employees, where you just kind of had to step into that like leadership role and make sure where your accountant background came in, you were good on the books there?
Right. I knew the billing, the books, the client names, and things like that. What I didn't know was the work in the field. The very first day, the crew told me to go get mulch, and I went in my car. I didn't know I was supposed to get a truck, and I ended up getting bags of pine nugget mulch.
Gotcha.
Because that's all I could find on the shelves that would fit in the trunk of my car. That's how little I knew about landscaping when I started.
Gotcha. And then since that time to today, what has been the progression like through owning a landscaping business and learning whatever you've learned through that time there?
So, once you own a company, even a maintenance company, you'll get asked to do like installs and little patios and things like that. And I got into hardscaping through a Scottish stonemason on Nantucket who basically approached me and wanted to be like a subcontractor where I would go out and find the jobs and sub it to him. And so I kind of slowly started to learn that aspect of it through writing the estimates and asking questions and seeing how things were being done. Our company had two things that really platformed it at the time. One, I bought another business on the Cape with Cape Cod, which is the mainland. So now we're running two locations. And then the second was I hired a business developer from a company called Valley Crest, which became Brightview, so a big corporate company in Boston. I didn't know what a business developer was, but he explained that he partners with landscape architects builds relationships with them. And by joining my company, he then started to bring all those relationships to us. And we started doing more high-end profile projects. And that went from 96 to about 2006. And then I sold that company in order to go into the basketball venture.
And what brings up the basketball venture? What kind of led to that?
So I grew up in Washington, D.C., always played the game, just had a passion for it. Tonight's the NCAA championship, March Madness. But there was a minor league team nearby where I live, and it was coached by Kobe Bryant's father, Jelly Bean. So I started going to the games and found out that I could buy the team. And it was, in the beginning, it was just a hobby. But after the first year, we realized to have a professional business about it, we had to have a better venue because Cape Cod is a very small area, just has high school gyms. So we ended up moving the team to Manchester, New Hampshire. And that's where I had to make a decision. Am I going to go with the team and leave landscaping behind, or am I going to, separate or try to do both? So I sold my company and went with the shiny, fun object.
And then after the whole basketball thing, what brings you to today, where you've got Blue Claw Group and Blue Claw Associates? Did you get back into the industry after that time in the basketball venture?
Never had a plan to, but I had a daughter born. I was 44 years old, my third child. Her brothers were quite a bit older, so she was surprise baby, and my wife wanted to have her born in the U.S. for like medical reasons. So she started seeing a doctor down here, and I was in Canada where we had moved the basketball team to. And after a year of doing that, I realized I didn't want to be absentee dad. So I decided to give up sports, move back to Cape Cod, and I started crabbing just for fun. I didn't know what my next venture was. And so I ran into a friend of mine named Bob Maffey, he's an industry consultant now. He had a company back then. And so he went crabbing with me, and he talked me into joining his company, which he then sold to private equity a year later. But it kind of brought me back into the mindset of the industry. And I ended up having a reunion of a lot of my former employees who were in the area at different companies, and they kept encouraging me to start again. And so that was where the seeds were planted. So I had to design a brand and everything. And that's kind of where the whole Blue Claw Associates name evolved out of that. And we started in 2018, 2 employees, 1 pickup truck. And now we're going to exceed probably 80 employees this year, about 4.5 years later.
So then what was the learning experience like in the first time around that you were able to apply to this next time around, which has helped you grow so rapidly then?
Well, the number one thing for the rapid growth is the working with architects and designers, because once you build a relationship where they know that you trust their relationship with their client, you honor that, they're going to refer you to all their clients, as well as doing quality work. And so one leads to another, leads to another, leads to another. It's kind of like in sports, we call it corporate credibility. When one architect sees you working with another architect that they respect, they say, well, if you're good enough for them, then you're good enough for me. And so obviously we're in the era of social media and videos and drones. And so we can put our work out there and build and get more opportunities for those relationships. And then it's just a matter of whether or not you can handle the work. So we have never turned down a project that we were awarded. And that's how we kept growing the company.
Do you find that in today's environment, it's easier, or at least when you started your business, easier to start and grow a business in today's environment versus your first time around there? Given the tools, you mentioned social media, that's why I kind of bring that up there.
I don't miss stuffing envelopes and licking stamps all weekend for 600 maintenance accounts. No, that was one of the things that excited me about giving this a second go around too, was the social media aspect, being able to use tools like QuickBooks and other CRM software where you can email quotes out, you can get the DocuSign, credit cards online. A lot of technology makes it more feasible to manage a business and allows you to scale without being constrained by all those physical things.
So then where does Blue Claw Group come into play here? You're already got your plate full there with the landscaping business. You decide to take on more, as any entrepreneur, I guess, would there. Where does that come into play?
So I'd say about 2019, I joined a landscape owners group on Facebook called the Goat Gang, which is run by a landscaper named Tigran Gertz out in San Jose. and it's just a bunch of guys who own companies all around the country, and we post videos back and forth. And I went out and met a bunch of these people at a meetup, and they were following my videos that I would post. And I realized that I was a little bit older than the average person in the group and a little bit more sophisticated in terms of my business. So they kept messaging me, "Hey, I want to come follow you around. I want to learn from you. Can you teach me this? Can you teach me that?" And that really led me to develop a couple events. One being Building Better Connections, which is a facility tour, job site tour, and a conference where we bring architects in to talk to the contractors to help them get a feel for how that operates. And then the second one came out of that was Know Your Numbers, which is the workshops we've been going around the country teaching people how to build their operating budget, man hours, production capacity, and really figure out what their company should be charging at what volume in order to guarantee themselves a profit. Because a lot of the young guys they're just winging it, and that's dangerous.
A big reason why I wanted to bring you on is talk about that, knowing your numbers there. And getting into that, you've obviously talked to a lot of different contractors, and like you said, a lot of them seem to be just winging it. And I think that's got to do with us being loving the craft, right? And not necessarily really starting a business with business mindset. But what are some common issues that you're seeing when you're talking to contractors around the world and or in the States there, and trying to figure out where they're lacking and where they can be helped? What are some common issues, the common themes that kind of come up in those conversations?
Well, I think on the newer side, where you have younger, newer guys that don't know accounting or anything, they don't even know where to start, and so you see a lot of posts on Facebook, how much do you guys charge for this? Or how much they just want someone else to give them the answer, but the answer may not be right for their company. They may not execute, they may have a different overhead structure, etc. And so I really want to teach them how to calculate their numbers so they know what they need to charge. And on the even more sophisticated level, you may have companies doing 7 figures and they have QuickBooks and all this kind of things, but if they don't know how to process it and how to enter data in a logical, systematic way, QuickBooks can also mislead you with your profit and loss. It can, if you're posting large deposits as income, your P&L can kind of get squirrely and jump up and down, and doesn't make sense because your crews are out working. So we kind of teach them even how to unwind all that and make it so that their P&L reflects actual work completed in a month.
So when it comes to that data entry, where do you find that those contractors kind of get messed up, or where is a common way when you're entering that data into QuickBooks where a contractor will be misled based on what they're entering and where they're entering? Is there a common thing that contractors get messed up on with QuickBooks or with that data entry in general?
Definitely. In the hardscaping world, you're doing multi-week, multi-month jobs. So you're invoicing, a down payment, let's just say, or some people invoice the entire job as one invoice and then they apply different payments to it. But QuickBooks will recognize the revenue, the date of the invoice. So if you send out a $50,000 invoice for a deposit December 15th, and you look at your P&L at the end of the month and it says that you made 40 grand profit, you're going to think, wow, I did great this month. But there are no expenses for that $50,000 yet incurred. And so you might look at your wife and say, honey, look at this. We made 40 grand. Let's go to Aruba for the holidays. But you actually may have lost 10 grand, and it's just covered up by the fact that you made a deposit invoice. So those are the kind of things where we teach people about work in progress and how to post their job revenue in the right month that it was actually completed.
And when it comes down to that, is that something that comes down to like a cash versus accrual basis accounting, or is that something completely different when you get into that?
It does relate to that. What even accrual, if you're allowing QuickBooks to use invoices to drive revenue, when you send the invoice, QuickBooks thinks, okay, this is an accrued revenue that I earned because I made the invoice, but you haven't done the work. So if you're on a cash basis, all bets are out the window because when you deposit money is irrelevant to what your crews actually accomplished in a given week or month. You know what I mean? So I always tell contractors, get off of cash. Cash is for, ice cream stands who take the money in every day, pay the expenses right back out. It's fine if you want to file your taxes on cash and your accountant can convert your books, but to really manage a business, you need to be on an accrual-based system for your operating budget.
I want to interrupt this episode to talk to you about GPS Track It. When it comes to running a landscaping business, the question isn't what do you do, but what don't you do? If it's not a customer that needs your attention, it's one of your drivers or one of your vehicles. But you already know that GPS Track It exists to help you know more than what you already know, like the most efficient routes to maximize your service potential, like whether or not your vehicles and crews are where they're supposed to be, like how to save unnecessary fuel costs and other costs. And we're going to be covering the benefits of GPS tracking in the future on this podcast. So we're going to continue with the benefits of GPS tracking, but we'll let our fleet advisors give you the full picture. Call 866-693-1291 or go to gpstrackit.com/how-to-hardscape. Once again, that's 866-693-1291 or go to gpstrackit.com/how-to-hardscape. Link will be in the show notes. And so a contractor comes up to you and asks that question that you brought up, pricing. I don't know what to price here, or I don't know what to charge here. Ian, can you help me with that? Where do you even start with that type of conversation that they have with you?
Well, I mean, I can break it down to how we do it in the workshop, and we basically sit with them for a day and we help them calculate their overhead. So what are your rent payments, insurance, fuel, repairs, any kind of overhead expenses. We like to think about contingencies, like what if something breaks or, et cetera. Once you have an idea of the overhead, then you're going to calculate the man hours that you're able to produce and sell. So that's your production capacity. Now, we all have a limited amount of production capacity. We have 8 or 10 hours in a day times X number of guys. So you need to recover that overhead with that many hours. So there's your starting point is your direct cost plus your overhead, and now add your profit. And unless you're hitting the volume that you need to hit and you're executing in the field and you're priced correctly, it's very hard to make a profit.
So since we're on that topic of overhead, and then we'll come back to budgeting, recovering that overhead, do you have a preferred system or method to recovering that overhead? I know there's multiple out there, the multiple overhead recovery system, the single, going through the labor hours, kind of as you suggested there. But is there a preferred method that you teach and you try to promote? Or does it depend on the business model, or how would you go about that?
So I think it depends on the business model, and the system that I developed is more leans towards MORS, multiple overhead recovery. But what it does is it calculates the revenue from each service line. So we're actually charging for equipment in our estimates. We're obviously charging and marking up materials. We're charging for labor. We're charging for subs. And then it puts it into a projected P&L, profit and loss. So you can see where you're at. And a lot of first-time people are shocked when they see a loss at the bottom. And I said, you know what? I'd rather see that now before the year happens than to go to your accountant at the end of the year and see that. So this is projecting what you're going to do. This is the brick wall that you could be running into. Now let's tweak things. Let's massage things. Let's change our rates. Can we add another crew? Can we reduce it? Maybe you have too much owner salary baked in there or whatever. But we're gonna tweak this and change the dials until we get it to where we have a 10% net, and that's after depreciation and after all your contingencies. And so every service line is contributing to that net. But if let's say your business was labor only, like say you're a gardening company or something, those other things could be turned off, and it would be primarily driven by labor.
The way I like to do it, is something similar where I do recover my overhead through my direct labor, but then I use my markups on things like material, things like subcontractors, where subcontractors obviously take some of my time to coordinate. So I want to mark up to make money on that, as well as materials for warranty visits, or if a paver was to crack, to kind of cover those expenses. Whereas like all my overhead is kind of in that direct labor recovery based on those man hours that you suggested there. Is that something similar to the way you go about it, or are you kind of leaning a little bit more to that MORS method?
I think it's more what you said. You know what I mean? It's just the recognition that we're not just landscapers or hardscapers. We're actually business people. So we're selling labor. That's one service that we're selling. We're material sales. We sell stone, pavers, whatever, trees. We're also selling equipment. We're like a rental shop. We're making money on our equipment. A lot of guys don't even price their equipment in, and I tell them, if you do that, you're donating your equipment to your clients so they can live in a nice mansion. They thank you for the donation. Or if they're not counting the owner's salary into their pricing, they're donating their time so their wealthy clients can live in a nice house.
Do you find a lot of contractors don't even consider their owner's salary in their budget at all? They just think that the profit is what their salary essentially is.
Exactly. And you got to think, like, if I'm not here and someone buys my company, they have to hire someone to replace me. So the owner's salary should be baked into the equation. Even if you're not taking it all or right away because you want to build up your cash reserves, it should still be in your operating budget so that you're recovering it in your pricing.
Ian, do you grow your business with the mindset that one day you will sell it? And does that differ from if you weren't to go about that method, the way that you would go about growing your business?
Absolutely. I mean, when I was younger, you don't think about selling your business. You think you have forever. I'm in my second stage of my career. So yeah, I'm not going to do this forever. And we're all going to exit our business one way or the other, whether we like it or not. So you might as well run it to exit it in the most beneficial way.
And then going back to budgeting and talking about overhead, what are some common things that even if a contractor understands the idea behind overhead and trying to add up all their overhead for their season, that they're still leaving out? They don't even think about, even if they do have some sort of idea behind overhead in their budget.
Well, so in our workshop, the spreadsheet that we use, it has over 70 worksheet pages. So it's basically got them all. And it's asking you, what are you going to spend here? And what are you going to spend here? What about a contingency? And so it would be they end up usually overloading it because now they're thinking about things they had never thought about before. But, you really need to capture all that. If you have good accounting or some accounting from the previous year, you can use it as a guideline. But we don't want them just to copy that into the new year budget. We want you to say, what are you going to actually spend this year? If you own 3 dingoes, hey, you don't necessarily need to put them in this year. You put the ones that you're going to buy this year in because it's a year by year budget. Maybe you're still depreciating them, but it's more like getting them to, and it's great when they bring a second person like a bookkeeper, office manager, or partner or spouse, because they debate back and forth when they're doing the worksheet. And that's very healthy for the company to be out of work, not distracted, and really having that dialogue about, do we really need this? No, we don't need that. Okay, but what about this? And they really dial it down to the really what it's going to be.
And you've mentioned depreciation a couple of times. How do you go about adding something like depreciation to a budget for things like equipment and other assets in your business?
Well, it's kind of a straight line depreciation. We're not doing it for taxes. We're doing it for the operating budget. So you basically put in the acquisition cost and divide it by a number of years. Do you want to do 5, 7, 10? You just need to allocate that over the period that your company is best fit for. And then at the end of those years, you will have the money back to rebuy that equipment again, because you're recovering it in your pricing and also still making a profit.
Considering the, I guess, environment that we're in today after a boom of 2 to 3 years there that we've had, and then words like recession being thrown around, entering a period like this, what do you look at in your business, or do you create a game plan if there was ever a slowdown in sales, despite your backlog of work that you've already have? Do you create a game plan for if there is a certain percentage of slowdown in sales, a game plan for if there's no slowdown, it's still going, and a game plan if things just turn around and continue to grow as they have been? How do you go about that with your business?
Well, a few years ago, we started doing maintenance. We installed some pretty substantial projects and didn't want to just walk away from them and see our competitor come in and maintain them. So we started a maintenance division, and it's grown rapidly over the last year and a half. So that would probably be our pivot, is the maintenance, because we have a saying here at Cape Cod and Nantucket, like the millionaires and billionaires are never going to mow their own lawns and cut their own hedges, no matter how bad it gets. But we have not felt anything in our day-to-day business that would indicate something like the recession is coming. But of course, you hear it on social media every day that it's around the corner. But people are still signing for projects and still buying. We have a pool division. We're sold out with pools, tennis courts, pickleball courts. I have another sport court company. So we're just going to keep going as it is. And, if things happen, then we'll have to pivot and probably put our energies into that maintenance division more.
I just want to take a break from today's episode to talk about our sponsor, Cycle CPA. You may have a CRM or project management software in place, but what data are you using to ensure your estimating is accurate? Having a proper accounting setup and accurate bookkeeping done is key to understanding overhead expenses and other costs that must be recouped in your estimates. Cycle CPA is a remote bookkeeping and CFO firm that helps to connect the dots from the financial reports to the hardscape and landscape data needed in order to reach high profits. They provide landscape and hardscape industry benchmarking, job costing financials by service line, advisory meetings, and much more. Cycle CPA's team of accountants are specialized within the hardscape and landscape industry, and you can visit them at cyclecpa.com, and for $200 off, mention the How to Hardscape podcast. Now back to our episode. Anything else in terms of the knowing your numbers workshops that you put on that would be valuable to touch on here? We've covered budgeting, overhead expenses, and going over overhead recovery systems. But anything else that comes up that are real eye openers to contractors that visit that workshop?
Well, I call it the cost of loss. So people don't realize that let's say you're a 10% net company. If your employees are squirreling away an hour a day, which is not very hard, 15 minutes in the morning, 15 minutes on the site, 15 minutes at the end of the day, whether it's going to the, McDonald's twice to get coffees or just taking their time and leisure. If you lose 1 hour per employee per day, that takes away the net profit of the next 10 hours that they work.
It's a good way to look at it.
Because you can't recover that billable hour in the next hour because you've got already direct labor and you've got your overhead. So you can only recover it in the little fragment of net profit. So in order to recover that, now it takes the next 10 hours profit and reduces it to zero. And you can imagine companies are going, 3 employees, 5 crews, 10 crews, the more it just magnifies the problem. And as owners, we think, well, I got to grow. I need more sales, but they're not dealing with the issue. So the issue is, how do you either build some of that time that's not billable into your estimates or into your overhead? One of your budget items could be shop unbillable time, but I like to round up for a full day for our job estimates. And then also efficiencies in your company, like how are they getting out the door and those type of things. So if you're focused on those, how to solve those problems, that's how you double your net profit. Because if you can achieve a better than 100% efficiency rating, your profits are going to be more than double what they would have been.
How do you go about contractors that might say this is all great and coming up with a cost-based approach to estimating is great, but I'm not landing any jobs and my close ratio is well below what it should be. So I need to lower my prices somewhere. And in that sense, they're looking more so at like a market-based approach to pricing where they're based on their budget that they've created, they're over the market in terms of that pricing the projects. How do you go about, do you start then to dive into their budget and see what things could be X'd out to get them to where their market should be? Is it a business model thing? Is it a market thing where you may suggest them to move to a more widely populated area to operate their business? How do you go about that? Or is that a multi-pronged approach that you need to kind of consider all those things?
It's definitely multi-pronged because you can't take a company whose model is a commodity like say commercial maintenance, and say, oh, well, you just got to go get high-end clients and they'll pay you more, because that may not fit for their geographical area or who they want to be. There are many McDonald's and they're very profitable, right? But then there's also that steakhouse that's, high end. So I think you have to define what type of company you want to be. And if you're not getting those bids and you're in that lower end market, you probably need to look at your pricing, but then spread your costs over more employees. So you need to get wider, because that's another way to slice up that overhead and not have it hit each hour as impactful as if you're lesser employees. If you're trying to be in the design build world or the bid build world, and you're relying on Yelp and HomeAdvisor for all your leads, you're probably not going to get the clients that will pay the rate that you need to get. So you probably have to figure out a way to upgrade your clients. Now, that's probably through branding. It's through building relationships. What we do with architects and designers can work with custom home builders. It's just basically going out there, finding the job sites, asking for the business. Nobody's doing that anymore. People just sit back and wait. They barely return phone calls, contractors. And so I'd much rather be smart in the landscaping industry and be in the top 1% than be smart in like the computer industry where everybody's smart. So it doesn't take a lot. It just takes people to step out of what is the standard, comfortable way of doing things and think about it as a business person.
And provide good service by answering those calls, especially during those busy times, because that's the toughest time to do it, but it's the time that you need to do it. So
absolutely.
That being said, and turning the page on knowing your numbers here, and we can revisit it if you want as well, but growing a business back when you did, and then growing a business now, and your role in that business, you've obviously had to hire the right people in the right places. How have you gone about doing that? And how have you gone about getting buy-in from those employees for them to fill the roles that you need them to complete for the business that you operate?
So this business, I had a cheat code, which is former employees. So when they joined, I already know them. They know me, my project manager, they knew them. We know that, these three masons are going to build a beautiful wall. So that was a bit of a cheat code to get us started. But in order to attract the management talent and things like that, you have to have a vibe of like success, and you also have to treat people right. They say people don't quit companies, they quit bad managers. And, for these guys that left jobs they had for 10 or 12 years to come to work for my startup, I didn't take that lightly. So they did that for a reason, and they did it because they trust me or they like me, quote unquote. But it's because I let them be professionals, and I don't, yell and scream and micromanage. If I'm going to approach a mason who's, experienced, I'm not going to say, you're going to do it this way because I said. I'm going to say, hey, look, the architect wants this to be the result. How would you do it so that we can get to that result? And you let them give you the answer, and that gives them the respect that they know what they're doing and that they had a part in the process. And so I think once you're treating people that way, we also offer benefits, health insurance, 401k, paid vacation, paid holidays, all those kind of things attract people to your business, because all these guys know people that work at other companies, or they have relatives, and they all say, hey, how is it over there at Blue Claw? Oh, it's great. Da, 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 da. So we have people coming in. Hey, my cousin wants to interview, that kind of thing. So we're turning people away. We're fully staffed.
Ian, there's two more questions that I have that I like to ask every business owner that comes on the show here. And feel free to take them wherever you want. The first one being a horror story that you've had in business. And the reason why I asked this is there's a lot of contractors that are listening into the podcast that are just starting out or want to start and get into the industry. So we asked this to kind of give them a glimpse into what can happen as a business owner, and maybe even put things into place for their business to prevent this from happening in their future. But Ian, through your time in the landscape industry and through those two different businesses that you've had, do you have a horror story that you'd want to share with us, whether that's in the field, whether that's something with a client, payment, whatever that might be? But do you have a horror story that you'd want to share with us here?
Yeah, I have a couple that are sort of related, but recently, so I like to pay vendors with checks, old school. And so my office staff would I would circle what to pay. They give me a report every week. Then the checks would be on my desk. I'd review them, sign them. Maybe one of them you need to go talk to the vendor, so you put it to the side. And so there was a particular plant supplier, regional plant supplier, who kept pestering us to wire money. And so one day I'm in Nantucket, my computer tech guy is calling me saying, Ian, your office manager's in tears. Apparently she sent money to a scammer. Ooh. Because it sent a form that looked like the nursery company, but it was like wrong bank numbers and everything. And she sent them $5,000, and she thinks you're going to fire her. So I have a project manager who was with my old company, and he's with me now, and great guy, loves running equipment, but he has a reputation for like hitting things. So he actually pulled a gas line and water line up at the same time. Sparks and water are flying. A rock comes out, hits the excavator, which at the time I was renting. I didn't own one. This is 4 years ago. The whole cab shatters over his head. He jumps out. He's afraid everything's going to blow up. In pulling up the lines, he actually pulled the entire electrical panel off the house. So it was over $10,000 worth of damage. So I called my office manager and I told her, listen, now you see why I like checks. Number one. Number two, Paul caused a lot more damage than you did out in the field, destroying things like this situation. And I didn't fire him, so it's not the end of the world. We're just going to learn from it and move on. But, that goes to show you that there are those situations where you got to be careful, especially in today's age.
Definitely. And for two things to go wrong like that on the same day, that's a tough one to swallow. What do those make it to the budget in terms of like updating a budget to try to recoup those lost dollars? Or is that something that you just kind of brush off and move forward and know that you kind of lost that money there?
Well, in the year you have a budget and you have things that are over and some things that are under. You hope it kind of works out overall. Next year, clean slate, start over again.
Final question for you, Ian, before we wrap up here. And this is a big one. Feel free to take it wherever you want. Personal, business related, anything you want here. But what is one thing you know now that you wish you knew from the very beginning? It could be something that you know now in your landscaping business that you wish you knew from the very beginning when you started your first landscaping business. It could be something personal related. But what's that one thing you know now that you wish you knew from the very beginning?
I mean, I think it would be just the confidence to be able to go and ask for the business. Because coming from an accounting position, I was behind the desk and I was afraid to talk to contractors, clients, because I was afraid to ask me a question I couldn't answer. But, now knowing that it just takes, gumption to be able to go and say, hey, I really want this project. I think it'd be great for us. I'm asking you for the business. People want to reward people. And so if you're direct like that and you appeal to them or you go to that job site, I got on the cover of Lawn and Landscape because I went straight up to the editor and said, hey, why don't you come out to Nantucket, all expense paid trip, and do a story on me? And so 6 months later, they came out and did a story. But if I didn't have the guts to go ask for it right then and there, it wouldn't have happened. So a lot of the younger people or people that are kind of introverted, like I'm introverted, but I wish that I knew that it was okay to go out and just ask for what you want.
It's excellent advice. And Ian, any other closing comments, remarks that you want to leave our audience with? If not, or if so, also let us know, where can our audience go to find out more about you, what you've got going on there, wherever you want to send them to. I'll let you have the floor here.
Absolutely. I would just say that, listen, we're in business to make a profit, to make lives better for our employees and our clients. And so it's very important that you understand your business model and that you really dig in and know your numbers so that you're operating as a business person. And if you want to learn more, you can go to blueclawgroup.com, and there's live events there that you can register for. We also do one-on-one Zoom sessions if you're interested. And Blue Claw Associates, we have social media, YouTube channel. We got a videographer. If you want to follow our work and tell us how we're doing, we'd love it.
Awesome. Ian, thank you so much for your time today.
Thank you. I appreciate it.
Thank you for listening to today's podcast episode. And once again, if you're looking for that software that'll help you streamline processes in your business, check out How to Hardscape headquarters. That's available at the members.howtohardscape.com website, where we also have training courses that you can train and onboard your employees with through this software. So once again, members.howtohardscape.com. Once again, if you need bookkeeping, accounting, CFO services, reach out to Cycle CPA at cycle_CPA on Instagram or cyclecpa.com. Let them know How to Hardscape sent you for $200 off their services there. And if you need GPS tracking in your landscaping business, reach out to GPS Track It at gpstrackit.com/howtohardscape. And we look forward to meeting with you next week on the How to Hardscape podcast.